our second presentation now, and it is ASX and OTC traded Kinetiko Energy Ltd. It's helping to resolve the energy crisis in South Africa by developing the country's largest onshore natural gas resource. Now, this week, it raised a substantial amount of Aussie dollars to assist the development of its near production Amersfoort project. And it is, the market cap on the ASX is 93 million Australian dollars. And Adam Sierakowski is the executive chairman. Thank you very much indeed. Adam, over to you.
Yeah, thank you, Sarah, and thank you to Master Investor and all the participants on this webinar. It's great to have this opportunity to update you on Kinetiko Energy's progress. So we are a company that is absolutely focused on onshore gas exploration and the progression of our already enormous discovery we've made in South Africa, in a wonderful location that is surrounded by existing energy infrastructure. Obviously, for those that are aware, the opportunity is very real for our company because there is an extreme local energy crisis. Most people in South Africa do not have availability to affordable and reliable energy, which I'll get to in a minute. Our project has the capacity to provide a near-term solution, taking our already large discovery and proving that up further into a development and production scenario in just a number of years. As Sarah alluded to, we have just finished a funding round very successfully in Australia. So the company is funded to conduct and complete a very exciting 5-well flow testing program, which it's planned to do over the next 6 to 8 months, and to commence in really just a number of weeks. As I mentioned, this is all underpinned by this substantial discovery, which is a contingent gas resource of some 6 trillion cubic feet in a 2C categorisation. And we're here to tell you there's absolutely no risk that resource is going to grow even larger as we continue our baseline exploration program. Really importantly, we've made this discovery in a jurisdiction that hasn't had this sort of energy before it. I mean, South Africa has been a coal-based energy economy, and what we've discovered, we believe, is going to be a very low-cost and potentially low-risk development scenario that we can bring about in the years to come. So just a little bit more on that current South African energy crisis. It's very real. It's very much now. For those that don't know, power blackouts of up to 12 hours a day occur, and you can see from the graph in the right top-hand corner there, that's been increasing to a scenario where it virtually occurs at 100% every day of the year. It's called load shedding. It's incredibly disruptive to the South African economy, and there's a desperate need to find a solution. I mean, South Africa has depended on its coal-fired power stations for over half a century. Those coals are basically fed into power stations, and the coals are dirtier, they're deeper and more distant. So the economics of that aged coal-fired fleet is in rapid decline. In terms of other energy alternatives, certainly alternatives, hydro and solar, wind projects, renewables generally, nuclear are simply not an evolving solution for the country, and are not envisaged to be, certainly in the next decade and beyond, an energy solution. There is gas that has been available to the country that has come from Mozambique, an offshore field called the Pandey Temane production field. You can see in a chart on the right bottom side, that field has produced gas really reliably for South Africa for over 2 decades. but it is now going to into rapid decline. And as I'll show you in a minute, that gas, which is principally to support one of the largest South African utilities, Sasol, and their refinery at Secunda, is already telling downstream customers that they can expect to have gas supply cut off completely from 2026. So there is a deep need to find a solution for this energy crisis. So I'll just tell you a little bit more about our assets. There they are, located approximately 150 to 180 kilometres southeast of Johannesburg, and I think one of the keys to this is their location adjacent to infrastructure. You hopefully recognise the black diamonds on the map. They're existing large South African coal-fired power stations. The red line roughly indicates that gas pipeline that comes down from Mozambique into the red square, which is the huge Sasol-operated Secunda coal to liquids and becoming gas to liquids refineries, one of the biggest in the world. And then that feed in the purple line is the Lily pipeline that descends through the company's tenements down to Richard Bay and major customers. So again, we have the potential to feed into an enormous electricity grid of power that's abundant in the region, and also this pipeline, and that can flow either way. So a couple of the key attributes beyond our location is our terrific success rate. The company's been in operation in South Africa, exploring for a decade, and it's enjoyed a 100% success rate in the 44 wells that it has drilled to date. All have encountered gas with significant shallow pay zones. Indeed, we achieved quite a milestone last year with not just the enormous certification of 6 trillion cubic feet of gas, as I mentioned, which is equivalent to 1 billion barrel of oil equivalent, but we also had certified from internationally recognised group Sproule our maiden gas reserves in a 2P category of 6.4 BCF over but a very small pilot. And that pilot down in the land holding category is identified there as being certified as only 0.2% of the granted tenements, which amount to some 6,000 square kilometres. So one of the obvious focuses and strategies of the company in the coming years is to step out and grow that gas reserve enormously. As I mentioned, we will grow the underlying gas resource. We have the ability to do that in two foreseeable ways. The first is that we already have a certification of a prospective resource of 5.8 TCF. We are drilling core wells every other month that will be used to certify and move that 5.8 2U into 2C. But in addition to that, I'd just like to reference that from the diagram, you'll see the yellow and orange tenements in our exploration rights 272, 271 and 270, and they are the tenements which contain our existing resource. A very large tenement out to the west, which is ER 383, some 2.3 thousand square kilometres, is in application and is expected to be granted in the next 6 to 8 months, and then will be added to our resource calculation, is expected to increase that contingent resource significantly. So when we think about such a large opportunity in South Africa, in fact, probably at this time, growing to one of the top 10 onshore gas resources in the world, we look to have development partners, and the company's made positive steps with some domestic partners in South Africa to help build out our project in the decades to come. Just a little bit on the development characteristics. I'll just touch on these because we think these also tick a lot of boxes. As I mentioned, shallow conventional gas, we don't have any fracking requirement. The gas itself is in this conventional setting. It sits in sandstones which are above and contiguous with the Karoo Basin coals, which are significant in such a large part of this region of South Africa. And what we've discovered is that even in these low-lying formations, solid reservoirs of gas have been compartmentalized by enormous dolerite sills that cap the gas, and then dikes and faults that hold it into compartments. And it'll be our journey to interrogate multiple reservoirs to take out this mighty gas resource. From the testing we've done to date, it's a very high quality gas, 96 to 98% measured methane, with the remainder of hydrogen and very little CO2 measured. We have recently, only last month, been able to conduct and complete a gas to power proof of concept, where we used one of our early pilot production wells to co-fire a large gas generator, one of the first demonstrations of its type ever to be accomplished in South Africa. And we've effectively turned our high quality gas molecules into electrons, which is an exciting vision of addressing this energy crisis in South Africa. And we just mentioned there that it's also part of a process of modelling the fields that we put together in the future. And finally, that's we think that ticks a lot of ESG credentials as we look to be a really important part of the decarbonisation of the South African energy environment. Just a bit on our development strategy. As I said, we've been busy as an explorer in previous years. We've had that enormous exploration success. We now turn to our production vision, and we're very confident and convicted to what we can achieve with these 5 upcoming production wells to confirm flow testing characteristics. At stage 3, beyond that, we have an existing legal joint venture I touched on before with one of our partners. It's the Industrial Development Corporation of South Africa, and they have partnered up with us to drill a field of wells, which will start off as being approximately 20 in total, and the first 5 of those are programmed to be drilled starting in early 2025. And as that field grows to 20 wells, it is designed to produce gas from a micro LNG train, and we're hoping to generate therefore our first gas sales later in 2025 and revenues, which will be a very important milestone for the company. Corporately, I mentioned the enormous exploration right that we expect to have granted. That'll increase our resources, but probably more importantly is the grant of a production right. We're very advanced in processing the application for a production right, and have it on our path to be delivered by the middle of next year, well in time for our first gas production scenarios later next year. Finally, we mentioned at stage 5, we have a larger vision, and I'll explain in a few more slides, a term sheet that has been executed again with the IDC to deliver South Africa's largest onshore LNG project, which at its first stage 1 represents 50 megawatts equivalent of energy. So we believe we have a clear sequenced execution strategy to develop this large asset in the years to come. Taking that strategy out a bit further, and really this is a slide that we use to really articulate the strong news flow as a listed company on the ASX. We want to provide news flow to investors on an ongoing basis and a reliable basis. So apart from the core well that we continuously drill in country, we start this production testing set in the orange bar, and we expect flow rates to start coming out of the first wells as early as September, October, and we believe that we'll be updating the market every 4 to 6 weeks as we complete wells in sequence and provide results on those flow rates. And then you will see the company moving into further production wells with the IDC joint venture through the carriage of next year. There is additional production wells we've planned in other exploration rights, and we have the resources upgrade and production right potential that you also see there at the bottom of the chart. Just a bit then on our production test program we have coming up. I'll just draw a few points out here. It really is a focus of all our endeavours in the next 6 months, not only to achieve the highest flow rates and the best production data that we can, but I want to draw your attention to the map on the left that the privilege of our company is to be able to place these gas discoveries right where they're needed most. So you'll see the first well there is positioned right next to the Majuba power station. That is one of the largest in South Africa and has historically already been retrofitted to take gas to potentially co-fire it. And indeed, the second well you'll see is right next to the Lily pipeline. So in either of these scenarios, if we're successful in achieving high gas flow rates, and we're proving that the geology is unique in this region, the basis of that will be that we'll be able to put production clusters in the hundreds of wells in these regions to be able to produce gas into these very ready and available markets. We also have a high degree of confidence because we've done a number of core holes in this region, and over the last 2 years they've produced some of the largest gassy zones that we've ever discovered. In many cases, in excess of 130 meters of pay has been discovered. So for us, it's not a question of discovering gas; it's just now a question of how much gas we can flow. And on the Sproule report assumptions that are in place, 50,000 cubic feet of gas a day from flow rates is a baseline, and we expect to achieve far superior rates to that. So just quickly in terms of time, as I see I'm already over, just on the left is a picture of our proof of concept. That's a micro LNG train there being fed by a series of wells. This isn't our project, but it's a project that is in existence overseas. This is the sort of technology is available. It's very light touch. It's very scalable, and it'll be very easy to deliver in a quick period of time. On the right-hand side is a breakdown of the IDC term sheet that we have to deliver the largest LNG field in South Africa, as I mentioned, in its first evolution at stage 1. There are very attractive fiscal terms that has been offered to Kinetiko, and simply from that waterfall chart, if I could, it's approximately $138 million in capex that's been anticipated, 90 of which will be equity, 48 of which will be debt. But significantly, of the 90 million, the IDC is to contribute 51 for only 30% equity in the fiscal terms, which makes KKO's 70% for its modest contribution very attractive. That's the board of management. I'll leave that as read, and that's our corporate structure, which Sarah sort of mentioned, our current market cap. Our resource and reserves certification is there, and thank you, everyone.
Thank you very much indeed, Adam. Don't worry, I did actually come to you 2 minutes late. We do have 30 seconds. Now, your asset has been described as a world-class resource. I think you referenced that it's one of the top 10 in the world. For the sake of context, what can it be compared to, or are there no comparables out there at the moment?
Yes, Sarah, I've got to be careful here. In terms of onshore projects, it's very difficult to compare because most are deep conventional fields that have been discovered. But if we just simply turn to the resource number, I mean, any field that can come up with a number of 6 trillion cubic feet, and certainly over 10 trillion cubic feet of gas, and we generally believe that's a very achievable target. Anyone in the oil and gas industry can certainly reconcile how attractive that is.
Lovely. Adam, it's always a pleasure. That's Adam Sierakowski, the Executive Chairman of Kinetiko Energy. Thank you very much indeed. Take care. Thank you and good luck.
Thank you, Sarah.